Hey traders, Raghee here. We're going to take a look at some of the equities markets here in this recap video, just starting off with the Dow. And one of the things that you're going to notice is that while there is still very much an intact uptrend, for sure, notice as of late, the angle of the wave is starting to starting to lose its steepness. We're not punching up to the higher highs with the same type of vigor that we once did, right? And it's not the YM alone. I mean, you can see a little bit of that on the ES. And these are probably two of the better examples of trends that were a little late to the party. I'd say the trends that were kind of early to the party would be the Nikkei and the NASDAQ. And they too have transitioned. Nikkei is looking choppier than ever. NASDAQ has lost its trend. S&P too, if you take a look with these red grab candles, has lost its trend. They're in choppy markets at the end of uptrends. So there's still a bullish bias, that wind behind their back. Really only the Dow and the Nikkei are hanging on to just kind of these barely bullish type uptrends where we definitely see these markets have lost their swagger. Now I bring that up because we're going to talk about the other F word today, and that is froth. Now, froth kind of has made its way into the conversation because there's a lot of things now giving this froth narrative some merit. So there's other stories that are circling around this theme. One of them is the fact that Warren Buffett and Paul Tudor Jones, they use this kind of chart or comparison of the GDP of certain countries, major countries, compared to their stock market cap. And when it reaches a certain percentage, that's a froth zone. It's a symptom of froth. Again, it's something that Buffett and Tudor Jones watch. So obviously that gives it a lot of weight. So for entering this frothy territory, now what else is happening? Well, we're seeing visually, there's some kind of visual confirmation for that. And then we've got this week, following a pretty decent non-farm payroll last week, we've got the 2 days of Humphrey Hawkins' testimony coming from Janet Yellen, and we're going to start to see possibly some more shifts in monetary policy. In fact, it's not only the FOMC that's really expected to be hawkish, it's the ECB as well. It's the RBA, the Reserve Bank of Australia as well. It's the Canadian, the Bank of Canada, the Canadian Central Bank as well. So when you take these major, I believe they look at 7 major developed countries, and you compare again that stock market cap to their GDPs, you start to see what the problem is. And we're at levels, we're approaching levels that we've seen, I believe, in 2001, 2007, I think it is. And then now we're kind of up at those levels again. Let me show you the chart. Okay, this is the chart that I'm talking about. So you see where we are? And this is I didn't do this chart. This chart's Deutsche Bank's chart. So you see where we are? We're not quite there yet. We're still a little shy, but do you see why now they're saying it's frothy? Right, that's what we're talking about. And then you think about what's been happening with the central banks getting increasingly hawkish, suddenly people are worried about what this means to the equities markets. All right. So again, the central bankers now are taking a prominent place with their hawkishness, not their dovishness. And then you see the equities market starting to look about as lethargic as they've looked in a while. And suddenly that everything's dovetailing. All the narratives are pointing to people starting to fear a rollover. Now we're already in distribution. And that doesn't mean we can't just go down and test floors. What I'll be watching for really closely are opportunities to possibly get short. But before that, what are the opportunities amidst this environment where we could get long, but get long in a much more prudent, a much more strategic way? Not in a way that thinks trend follow, but more in a way that thinks overbought, oversold. And that's where we could really benefit from this current psychology. So that's where I want to think about what this kind of news right now, this chatter in the market means. And again, what that means when people talk about froth and how we can be tactical and still profit from this psychology. I'll see you in the next update.